Hello, traders. I am BFX, and I bring you one of the most interesting, the most informative, the most educative Forex content you can find on the social media space. And this is the first episode I will be dropping for the Forex pipeline. And do well to follow my page so that you don't miss out on any video talking about the forex market, because on this episode and many more episodes to come, I will be breaking down the forex market for you guys out there, and also teaching you guys how to trade the market the most realistic way and very straightforward. Yeah, so moving on, as you guys can all see, at my front here I have AUD USD chart, and first thing you want to do is you want to plot your support and resistance level, which I have actually done here nicely. Now, excuse me. So now when you open your forex chart, the first thing you want to do as a trader is to identify the overall movement of the market. Now, is the market flowing north, or the market is flowing south, or the market is just in a range? Now, as we all know that market moves in three directions. It either moves in an uptrend, or a downtrend, or a sideways trend, which is a range. Now, I will break down some pairs for us so that we can take advantage of them, because right now the market is presenting some opportunities. So first on our list today, let's go over to USD Canadian dollar. Now USD Canadian dollar is the very pair I personally like to trade. Yes, even if for a while now the market has actually been ranging, but USD Canadian dollar is a pair I actually do like to trade. Now, please don't mind the lines here. They are kind of confusing, but I understand them. So basically, what you want to do is to identify the flow of the market. Now, as we can clearly see, USD JPY is on an uptrend. USD JPY is on an uptrend clearly here. It is on an uptrend. Now, you want to be doing what? You want to be waiting for the best buy opportunities. Now, looking at this range right here, this range looks like an inverse head and shoulder, like so nicely. This head, it took it a very long period of time to actually form. Initially, I thought this was gonna be the trade or the breakout that was going to take out the neckline of the inverse head and shoulder, but then the market came down and then gave us a W pattern kind of vibe right here, and basically I'm expecting a blast to 1.4. Now if the market should blast to 1.4, we should expect a pullback into this level, obviously, and then a continuation all the way up. Now, understanding what this market is already doing, or what this market has already done using our past data, we will now scale down to our lower time frame. Now I'm scaling to the daily time frame. Now on the daily time frame, we can clearly see that this is a W pattern, and USD card is looking pretty much bullish to the upside. This is a W pattern, and the market is already approaching the neckline of the pattern. If you see those lines on the higher time frame, that is what this is the reason why I drew them. Now this is the neckline of the what of the W pattern, and I expect price to either reverse or react. Now what do I mean by react? Either the market will break that level and then retest that level. Now, as a smart trader, you can't be trading on the higher time frame. Why? Because the higher time frame, you can't be using 100 pip stop loss or 50 something pip stop loss. No, you have got to scale down to your lower time frame and identify the most immediate trend. Now, as you guys can see, these are some trades I took right here. This is the most recent trade I took on this pair. Now, basically, I am calling USD Canadian dollar to 1.37893, which is the neckline of the W pattern. And if we take out that level, we'll be heading for 1.38460. And then after taking out that level, I should be expecting a pullback or a retracement, anyhow you want to call it, and then for the market to continue the bullish move, because the market has actually been ranging for the longest time. It has been ranging for the longest time. So anytime the market breaks out, I'm expecting to see this kind of move, like this. This is the kind of move I'm expecting to see after a breakout of USD Canadian dollar. So we are pretty much bullish on USD CAD. I see no reason why USD CAD should not buy to 1.38, which is here. First 1.37 874, which is here, and then 1.38460, which is around here, and that should be the overall neckline. Yes, this is the overall neckline of the inverse head and shoulder pattern. So basically, I'm expecting price to blow up all the way to 1.4, this 1.4 here, because the 1.4 marks the round market cycle. Yeah, the round market cycle. I think, yes, the round market cycle. It marks the round market cycle because from this place here, from this previous support level, which is here 1.3 to 1.4, is 1,000 pip. So for each time the market moves 1,000 pip, a consolidation most at times used to follow. So that's just a normal market phenomenon. Now moving on to GBP USD. GBP USD has actually been pulling back for the longest. Yeah, since 2022, when this reversal from this level happened, the market has obviously been on an uptrend, creating higher highs, higher lows, higher highs, and higher lows. Now, basically, looking at this weekly chart right here, we are technically um short time bullish on GBP USD. And why do I say we are short time bullish? Because the overall trend, okay, yes, now, oh, we have even break out of the trend line. Oh, so basically we are not even short time bullish. The market has breaking out of a trend line, which has been holding this market for the longest time. This trend line has actually been holding this market for the longest time. And if we take out this level right here, this purple bar right here, I expect this market to blow up all the way to this support level right here. And then if we take out this support level, if we expect something like this, then a pullback here, and then a continuation to the upside. So this is what we should be expecting. But this can be a fake out. Yes, it can be a fake out unless this monthly candle closes with a full bullish momentum before I can say okay, GBP USD has broken out and is fully bullish. So, but for now, I can't call GBP USD bullish because it's kind of like a 50-50 kind of stuff. And as a trader, whenever you are trading and you aren't sure of what you are doing, it is better you just stay off that pair. But on the 4 hour right here, I'm seeing some kind of confirmation, some kind of breakout and pullback scenario. Now, if you look closely, this market has given an inverse head and shoulder right here. Let me just go to the daily time frame so that you can see it very clearly. Now, nice. So this is what the left shoulder. Uh, this is what the head. Sorry. Is it so clearly this is actually an inverse head and shoulder. The market is pulling back and I'm expecting a bullish reaction from this level. Now I expect the market to sell off to this level and then give us some buy confirmations. Now to back up our claim, we can see that the Fibonacci is also lining up with the neckline of the inverse head and shoulder. So I am expecting the GBP USD to retest the neckline of this inverse head and shoulder before it gives us bullish continuations to the upside. Now that is that about GBP USD. Now let us go to um gold. Yeah, gold has been giving us some kind of crazy moves to the upside lately, and it has not actually given us any decent pullback or um nice pullback actually. But then I will be really grateful if that will happen. I think this weekly candle that closed with a shooting star is a very strong sell signal. Now two things are involved. If the market breaks this level, if the market breaks this level strong with a strong bearish candle, we should expect gold to come down all the way from this place right here. If we drop with a very strong bullish momentum, I expect gold to come back and retest this inverse head and shoulder it took it forever to create. Now this inverse head and shoulder did not just form um in a day, and which is why you should always make the higher time frame your friend. Now this inverse shoulder, obviously it started forming this inverse head and shoulder around 2020, which is practically 4 years. It took it 4 years to create this inverse head and shoulder. Now normally, if it took, now let's just calculate this range. Now it took this market basically think of 441 pips. Yeah, it's range for 441 pip if I'm not mistaken, right here. And then now imagine the market has been ranging all this while on the higher time frame, but on the lower time frame you can also catch moves, but then the market wasn't trending. But currently now the gold is now trending fully because it has broke out of a 4 year range. And as you can see, we know gold is bullish. So I expect the market to retest the neckline of this. Now this is where you want to be getting your entries from. You want to be getting your entries from this level. Your buy, if you want to hop on this buy, this is where you want to be getting your entries from the neckline Once we see candlestick confirmations at this level, then you execute, and then that's all. So I think for gold, I'm expecting gold to dip. Yes, I'm expecting gold to dip, but it has not actually given us a reversal kind of pattern yet. It's kind of trying to look like a triple top, but it's not a triple top. I actually am not even understanding what this market is actually doing at this level. But all I know is this is kind of like this is a range. Yes, all I know is this is a range because the market is not trending, it's just trading sideways and sideways and sideways. It has been trading sideways for some couple of, I think, for how many months now? Let me see. For like 1 to 3 months, for a couple of 3 months, and backing up the sale that is about to happen on gold. This doji candle right here signifies indecision. Last month closed with an indecision, so it is most likely to be that gold is going to short from this level all the way back to the neckline of this level. But then we don't have the power. The market will tell us what to do and we'll react to what is being given to us by the market. So I think that is that about that. I'm done with gold. So basically I'm expecting gold to what, to retest the neckline of this what inverse head and shoulder it took it years to create. Yeah, so that is just that about gold, and then you can ride the market all the way back to the upside, all the way back to 2500, um 2500 basis points right here. Now let's go to Euro AUD. Euro AUD. This is one pair I actually have traded for a couple of time, right? So as you can clearly see, this market was actually on an uptrend. It has broken out of the uptrend, and I expect the market to reverse from this level. Now, why do I expect the market to reverse from this level? Because when you take your Fibonacci from swing high to swing low, this market is lining up with the what, the 50 and the 61.8 retracement level, which I'm just waiting for some market reaction around here before the sale will continue. And if the market does otherwise, I won't be taking any trade on that pair actually. So I think with this, for now, this is the first episode of Forex Pipeline. I will be dropping many more content as time goes on. So do well to follow, do well to love, do well to share, do well to like, and do well to show this content to your friend. Many more educative content will be coming up. So do well to stay tuned and stay around. Um, it's all love from here. Peace out to everybody. BFX actually truly cares. Yeah. Bye everybody for now.